Right. So, if you were following the markets last week, Monday, March 10th was pretty crazy.
Oh, yeah.
A huge drop, almost 900 points for the Dow Jones Industrial Average.
Yeah.
That's over 2%.
Wow.
And it wasn't just the Dow, right?
Yeah.
The S&P 500 fell almost 3%.
Uh-huh.
And then the NASDAQ dropped 4%, like a
Yeah.
lot.
Yeah.
That was actually its lowest point since like September last year.
Oof, that's rough.
So what happened, right? Like what caused this downturn? And more importantly, what does it mean for, you and me?
Exactly.
So that's what this is all about today. We're going to look at some of the financial news and analysis from the past week.
Yep, we're going to deep dive into all of it.
And hopefully by the end, we'll have a better idea of what went down and why it matters.
It's always interesting to see how all these different factors can kind of come together.
Yeah.
And create these big market swings.
Right.
Like one day things seem fine, and the next day, bam, everything's down.
Totally. Yeah. So to do this, we're going to be relying heavily on this Business World article.
Oh, yeah, this is a great article. Really lays out all the key players.
Yeah, it does. And it actually points to three main things that contributed to the downturn.
Okay, so what are they?
Well, first, there were some pretty interesting comments from President Trump about tariffs and recession.
Yeah. Those comments definitely got people talking.
Yeah, then there was the whole downturn in the tech sector.
Right.
Like Tesla, NVIDIA, Palantir, all these big names took a hit.
Mm-hmm.
And then third, there were some broader economic anxieties that were already brewing.
Yeah, there's always something lurking in the background.
Right.
So it seems like all of these things kind of converged last Monday and created this perfect storm.
Exactly. And what's really interesting is that the Business World article points to a specific event that kind of kicked off this wave of investor nervousness.
Oh, really? What was that?
An interview President Trump gave on Fox News just a couple of days before the market tanked.
Oh, wow. So what did he say?
Well, he was asked about his tariff policies. The ones on Canada, Mexico, and China.
Right. Those tariffs have been a big talking point.
Yeah. And the interviewer asked him straight up, could these tariffs cause a recession?
Okay. And what did he say?
Well, I'm going to quote him directly here. He said, "It could be, but we're doing what's necessary." So you can imagine if you're an investor and you're already a little worried about the economy, and then you hear the president say that his own policies might lead to a recession.
That's got to be unsettling.
Right. It's definitely not a vote of confidence.
It just creates so much uncertainty.
Exactly. And the markets hate uncertainty.
Oh, absolutely.
Yeah.
When investors get nervous, they start pulling their money out of the market.
And that's exactly what we saw, right?
Yeah. That sell-off on Monday was a pretty clear sign that people were getting spooked.
Yeah, it was. And the tech sector really felt it.
Oh, yeah. That was brutal.
Yeah.
I mean, Tesla's stock fell over 15% in one day.
Wow.
Hit a 52-week low. That's a huge drop for a company like Tesla.
Right. And it wasn't just Tesla either.
Yeah, NVIDIA was down over 5%.
Uh-huh.
And Palantir lost more than 10%. It's crazy to think about how much value was wiped out in just a few hours.
It is. And, it makes sense that the NASDAQ would take such a big hit, right?
Totally. I mean, those tech companies make up a big chunk of the NASDAQ.
Right. So when those stocks fall, the whole index falls with them.
It's a domino effect.
Yeah.
One thing leads to another.
And it kind of shows you how interconnected everything is in the market, right?
Absolutely. It's not just about individual stocks anymore. It's about entire sectors and the overall sentiment of the market.
And speaking of interconnectedness, this downturn wasn't just a U.S. thing.
Right. It had global repercussions.
Yeah. The Business World article talks about how the Australian market also took a hit.
Oh, yeah.
Both the ASX 200 and the All Ordinaries indices were down almost 2%.
Wow. So what does that translate to in dollars?
Well, the article says that Australia lost about $49 billion in market value.
Wow, that's a lot of money.
Yeah, it is. And it wasn't just the overall market either.
Right. Individual companies were affected too.
Exactly. Like Australian tech companies like Xero and WiseTech Global, they saw some pretty big drops.
Makes sense. They're the same boat as those U.S. tech companies we talked about.
Right, but it wasn't just tech either.
Oh, really?
Yeah, consumer-focused businesses like JB Hi-Fi and Meijer were also down.
Huh. So it sounds like the whole Australian market was kind of mirroring what was happening in the U.S.
Yeah, it really does. And it kind of makes you wonder,
Yeah.
beyond the president's comments and the tech sell-off, were there some other underlying anxieties?
Yeah, definitely.
Like, what were people really worried about?
Well, the article mentions a few things.
Okay.
First, there are those ongoing trade tensions that have been brewing for a while.
Right. Those never seem to go away completely.
Yeah, and then there's the debt ceiling debate, which always adds a layer of uncertainty.
Yeah, nobody likes that.
And then on top of that, you have the discussions about extending the tax cuts.
Yeah.
It's just a lot of potential for things to go wrong.
Right, and it's not just that any one of these things is going to cause a recession.
Right, it's more about the combined effect.
Exactly. It's like all of these things together create this atmosphere of caution.
And then when something like the president's comments happens, it just amplifies everything.
Yeah, it's like the straw that breaks the camel's back.
Makes you wonder how much of this drop was due to actual economic factors versus just fear and uncertainty.
Yeah. Well, speaking of fear and uncertainty, I think it's important to put this 900-point drop in the Dow into some perspective.
Oh, yeah, for sure.
I mean, it sounds like a lot.
It does.
But the Business World article reminds us that we've actually seen much bigger single-day drops in the past.
Oh, yeah, especially during the COVID crash.
Exactly. In March 2020, the Dow dropped over 2,000 points in one day.
Wow.
And then a few days before that, it fell almost 1,200 points.
That's insane.
Yeah, it was so, while this recent drop was definitely significant, it's not unprecedented.
That's a good point. It's a reminder that market volatility is normal.
Totally. It happens, and we just got to kind of roll with the punches.
Exactly.
Yeah.
But speaking of context, I think it's also important to look at this market downturn in the context of the new presidential administration.
Right.
There's another article we want to talk about. Can America's resilient economy endure Trump 2.0?
Oh, yeah. That's a good one.
Yeah.
It really gets into some of the bigger picture concerns.
What's interesting is that the article highlights this tension between the current state of the economy and the anxiety about the future.
Like how so?
Well, it points out that a lot of the current economic data actually suggests that the U.S. economy is still growing.
Oh, really?
Yeah, it mentions the Dallas Fed's Weekly Economic Index, or WEI.
Okay.
And for the weeks ending March 1st and February 22nd, the WEI was showing growth.
Huh. So things are actually looking pretty good right now.
Yeah, at least according to the WEI. And the 13-week moving average of the WEI was also in line with GDP growth from the last quarter of 2024.
So the data is saying one thing, but the market is reacting in a totally different way.
Right. And the article suggests that this disconnect is due to those tariff plans we talked about earlier.
Like the market is anticipating that those tariffs are going to have a negative impact on the economy.
Exactly, even if we haven't seen that impact yet.
So it's like a self-fulfilling prophecy almost.
In a way, yeah. The question is whether that negative impact will actually materialize.
And if so, to what extent?
Right. Will it be a gradual slowdown, or will it trigger a full-blown recession?
And that's the million-dollar question, isn't it?
It is. And the article doesn't shy away from the fact that President Trump's unpredictable decision-making style makes it even harder to predict what's going to happen.
Right. I mean, how can businesses and investors plan for the future when the rules of the game could change at any moment?
It's tough.
Yeah.
And, predicting recessions is always difficult, even with the best data and models.
Right. Like, remember the pandemic?
Oh, yeah, that threw everyone for a loop.
Nobody saw that coming.
The article actually mentions this U.S. Business Cycle Risk Report, or BCRR, which has a pretty good track record of predicting recessions. But even the BCRR failed to predict the pandemic recession.
Yeah, because it was such a unique event.
Exactly, a total outlier.
So where does the BCRR stand right now on the possibility of a recession?
Well, as of March 7th, just a few days before the market dropped, the BCRR was estimating a very low probability of a recession, like around 1%.
Wow, that's really low.
Yeah, so it seems like the current recession fears are more based on speculation than actual data.
But that could change quickly, right?
Absolutely. The article emphasizes that this is a very fluid situation.
Right.
Things could shift dramatically depending on what happens with those tariff plans.
Yeah, and it's not just about the tariffs either.
Right. It's about the overall policy environment.
Exactly, and how that affects business confidence and consumer spending.
It's all connected.
It is, and the article actually includes this really stark warning from Andrew Wilson at the International Chamber of Commerce.
Oh, yeah. What did he say?
Well, he said that he's worried about a potential downward spiral that could lead us into 1930s trade war territory.
Wow. That's a pretty scary thought.
Yeah, it is. And it just highlights how much uncertainty there is right now.
It's like we're standing on the edge of a cliff.
And we don't know if we're going to step back or jump off.
Exactly. And the crazy thing is that so much of this hinges on the actions of one person.
Right.
The president.
So it's like we're all just waiting to see what he's going to do next.
And that's not a very comfortable position to be in.
Nope, not at all. But I think that's a good place to wrap things up for today.
Okay.
So let's just quickly recap what we've learned.
Yeah.
On March 10th, the market took a pretty big hit. The Dow was down almost 900 points.
Right.
And this was mainly due to concerns about President Trump's tariff policies.
And those concerns were amplified by the sell-off in the tech sector.
Exactly. Plus, there are those underlying economic anxieties that were already brewing.
Yeah. Trade tensions, the debt ceiling tax cuts, the whole 9 yards.
Right. But it's important to remember that market volatility is normal.
We've seen bigger drops in the past.
And the current economic data actually suggests that the U.S. economy is still relatively strong.
For now, at least.
Right. But the future is uncertain, and a lot depends on what happens with those tariff policies.
It's a wait-and-see game at this point.
So here's a question for you to ponder.
Okay.
Given all this uncertainty, what are you going to be paying attention to in the coming weeks and months?
That's a good question.
What are the economic indicators that you think will give us the best clues about where things are headed?
Yeah, will the market continue to slide or will it bounce back?
And what impact will those tariff policies really have?
It's going to be interesting to see how this all plays out.
Definitely a lot to think about.
For sure.
Thanks for joining us today.
My pleasure.
And we'll see you next time.
Sounds good.
Bye.
If you found this discussion informative, please like, subscribe, and share this channel to get daily discussions on a current economic topic.